Here's an important saying you need to know. As the semis go, so goes the rest of the market. And by semis, what we're talking about is the semiconductor index. Now, if you've never thought about the semiconductor index, by the end of this market forecast, I think you'll be incorporating it into a regular part of your stock trading and stock analysis. Let's take a look at the S&P 500. Earlier in the week, we were talking about how Trump's rhetoric was putting stocks on sale. Not cataclysmic, not apocalyptic, not everything is crashing on us, but, a little bit of a flash sale on stocks, and then we've popped right back on up. And as I'm recording it this morning, we're starting the day off even higher than we closed on Wednesday. That wasn't unexpected, and I generally think the health of this bullish trend is fairly intact. And one of the reasons I think this is by looking at the semiconductor index. You'll notice if we plot this in blue on the chart here, that generally speaking, the S&P and the semis have been trending together, and that's a positive sign. Now, I didn't come up with this. A guy named Charles Dow back in 1900 literally thought that if trains were delivering goods, then that probably meant that there was a healthy economy going on and people were buying things and companies were making things. So if transport, trains, was going up and industry production was going up, then that was confirmation of sorts of a bullish market. But if trains started slowing down, if the transportation index turned down, then he surmised it was only a matter of time until industry turned down and vice versa. What he was looking for is confirmation. Today, we still look at that similarly, but instead of trains delivering goods, what's been a much better analysis of market direction is semiconductors. Why is that? Because semiconductors are in everything. They're in your car, they're in pharmaceuticals, they're in the lights that are powering this studio right now. Semiconductors are in everything. And if semiconductor business is good, then business as a whole across all the sectors is surmised to be good. In addition to that, we've now got our mega cap stocks that are deeply rooted in the tech industry and certainly driven by AI. And so as semiconductor production is ramping up and supporting those industries, we're going to see it drag the S&P 500 up with it as well. As the semis go, so goes the rest of the market. Here's another thing I'd like you to look at. One of the things that we think about when considering the direction the market is going to go is how is money flowing? If money is coming into an economic situation, it tends to drive the price up. Think about it in real estate. If there's a whole bunch of people waiting to spend money on houses, then those that are getting ready to sell their houses can probably charge a little bit more because there's a lot of money on the table to be spent. The same is true in the stock market. If there's a lot of people that are putting money into the stock market, it's creating what we call liquidity and going to tend to drive the price of the stocks up. But where does that money come from? To look at that, let's check out this, what I call three-headed monster. We've got the 10-year treasuries or government bonds, we've got crude oil, and we've got the US dollar. If these three are going down, 10-year treasuries are trending down, crude oil is trending down, and the US dollar is trending down, that money needs to go somewhere. If people are exiting crude oil, treasuries, and dollars, where are they putting it? Into the stock market. And we see that generalized in the S&P 500. And indeed, while we've had a little bit of an upturn in the 10-year treasuries, generally speaking, the trend of this three-headed monster is still down, which is good if you're optimistic and bullish on the S&P 500. As we wrap up this market forecast, let me give you a few stocks to consider. I'll be doing a deeper dive into these in our regular Power Trader on Monday. But let's start here with ABBV. We've got ABBV on sale. I like to look at the stochastic oscillator to see when stocks are on sale, quote unquote. With stochastic at 20 and ABBV sitting here at support, this is a stock you might want to go do a little additional analysis on and consider a trade. Now let's take a look at JP Morgan. JP Morgan is on sale here. Stochastic is below 20. And we also see that JP Morgan has recently come through earnings. Now, they missed their earnings forecast, and I believe they missed on both revenue and earnings, but I wouldn't get too twisted up about that. JP Morgan has been doing a stellar job of managing this uptrend, and a little bit of bad news, I think, just put JP Morgan on sale for those that are interested in possibly taking a trade. So do your analysis on this, do your forecasting on this. But I think JP Morgan is an interesting stock to keep an eye on. Lastly, let's wrap up with Apple here. Apple also went on sale. We can see stochastic below 20. Now, I need to point out on Apple, we've got earnings that are coming up on January 29th. So 7 days from now, a week from now, we'll be having earnings on Apple. I'd be very cautious trying to trade a stock through earnings. And even leading up to earnings, there can be some challenges. But Apple, a very, very strong, powerful, bullish trending stock here. And it looks like prices have come down a little bit with stochastic below 20. Could be an interesting opportunity to jump in. If you enjoyed this kind of market analysis, be sure to subscribe to this channel. We put these out regularly, or reach out to us, ask about Power Trader, and of course, ask about our funded trading accounts. With that said, blessings on your trade as you go forward. I hope to see you for the next market forecast.